It's Thursday, January 19th, 2023. We have a lot to talk about today. First, I apologize if you hear any snoring. Nugget is in the chair in the family room taking a nap. Sometimes she gets a little bit loud. So if you hear something, it's Nugget taking a nap. Real quick, please make sure to like this video. Make sure to support this channel and share these videos everywhere possible. Make sure you subscribe, hit that bell notification down below. But without further ado, let's get into this. Today, more signs of economic collapse. And just to highlight a few things as I was watching some of the news today, some of the things they're talking about that now are beginning to affect everybody, things that no longer can be hidden. Waves of layoffs, thousands and thousands of layoffs taking place. We're seeing them across all sectors, especially in tech. More retail numbers, earnings coming in with more retailers, worse than expected. Somebody remarked today on one of these channels, I think it was Fox Business, 70% of people work for small business. And 60% of small business owners say they don't think they're going to be around in a couple years. Think about the potential, the catastrophic amount of unemployment we're going to see in the next 24 months right here in America, and the destruction of small business, the backbone of America. It's just so sad. Mortgage rates. This was a big topic today. This was great news. 30-year fixed rate now at 6.15%. So we should all be jumping up and down. Now everybody can buy a house because mortgage rates are down to a whopping 6.15%. Now people will say, hey, that's a normal rate. That should be fine. Yes, that is a normal rate. Unfortunately, we have abnormal prices of homes where prices were going up 20, 30, 40% a year. That's not normal. 6.15% is normal, but a home that 2 years ago, 3 years ago sold for $300,000 and now is $900,000, that's not normal. And that's a big problem. It says mortgage apps were up 27.5% this week. And that sounds like great news too. But unfortunately, if you don't have a job, you're not going to be able to apply for a mortgage. You're not going to qualify for a mortgage. Yesterday, I reported KB Homes, 6th largest home builder in the U.S., had a 68% cancellation rate. Homes that were under contract, 68% of those contracts cancel. That's nearly 7 out of 10 deals collapsed for KB Homes. Again, if you don't have a job, you cannot buy a house. You will not qualify. And so it's wonderful that, mortgage rates are down to a whopping 6.15%, yet we haven't seen prices come down to the amount that we're going to see them come down. That is the next shoe to drop. Home prices are going to get slammed. But they think that, this is great news. You should go out now, buy a house, because 6.15% on an overvalued piece of real estate is a great deal. Home builder stocks slammed today, but I saw a lot of cheerleading on the television today to go out and buy a house, that things are turning around, mortgage rates are coming down. It's a great time to buy, never been better. Also, Bank of America CEO Brian Moynihan said this today: the consumer is in good shape. So these were just some of the highlights from some of the shows I was watching today. Do you believe the consumer is in good shape? I certainly don't, especially after looking at some of the data today, but we'll talk about that in a sec. But CNBC, Fed Governor Lael Brainard sees high rates ahead, even with progress on inflation. She insisted the Fed won't waver in its commitment to taming prices that have come down some in recent months, but still remain near 4-decade highs. So when that came out, that was breaking news on CNBC. Shockingly, the stock market began to improve. We were down a couple hundred points on the Dow. As soon as this came out, you blink and the Dow was only down 88 points. I don't know what to make of it, but we were down nearly, I think, around 300 points at the low today on the Dow Jones. Dow Jones closed down 252 points. NASDAQ was down, I believe, over 100. Not a very good day. 3 days in a row now where the market has really gotten hit. Jamie Dimon says rates will rise above 5% because there's still a lot of underlying inflation. He is 100% correct. He also said something about a month ago that I think he's going to be proven correct here. He also said the consumer will be broke by midsummer. Now, he's right in a way, and I think he's wrong. I think the consumer is already broke right now. The only thing keeping the consumer going are credit cards. That's what's keeping the consumer alive. If it wasn't for credit cards, the consumer would already be broke. So technically, in my opinion, the consumer's broke. Jamie Dimon says the consumer will be broke by midsummer. I believe that's probably when the credit cards will be tapped out for most people and they will be broke. Nordstrom's shares sink after retailer posts weak holiday sales and slashes guidance. Nordstrom said weak sales and a ton of markdowns hurt its results during the holiday season. You know, looking at some of this data today, and I was talking to Sid earlier. I believe Sid's going to be on the show this weekend, but Sid was shocked, and I'm shocked that Dow Jones was not down 1,000 points today. That markets across the board were not down much more than they were. In fact, the Dow almost came back into the green today, shockingly, but it did not make it back to the green. But it was trying, and I don't know if it's some entity, I don't know if it was the Fed, but what in the world caused the Dow to turn around and almost come back in the green today on top of all this bad news? The data just keeps getting worse and worse. The retailer said, that is Nordstrom's, that it had to mark down merchandise more than expected to clear through excess inventory. Here's another one on the hedge today. The U.S. consumer has cracked. Discover plunges after shocking charge-off forecasts. More major red flags. The credit card debt right now in America is at all-time highs. This is one major red flag. The second red flag is the average rate across U.S. credit cards is just over 19%. I think it's about 19.03%. This is, in my opinion, a catastrophic combination. And we look at Discover today, and they're beginning to see cracks with the consumer. Charge-offs are forecasted to be 5%, even more for Discover. I would say expect massive loan losses for U.S. consumer banks coming very, very soon, ladies and gentlemen. These banks made horrible loans in regards to real estate, RVs, boats, and cars, all of it overvalued. Some of it loan to value 140% on automobiles. We know that we're seeing massive amounts of repossessions in the auto sector. People are falling behind, and that sector is 6 to 12 months ahead of housing, and now we're beginning to see major cracks in housing. So we are going to see bubbles burst all at the same time here, and it is really going to be shocking. I just don't think people can believe how bad this is going to get. I think it's going to be very, very bad for a lot of people here in the U.S. And as a country, for a country where a lot of people feel entitled, where a lot of people are not prepared, the pain here is going to be a lot worse than many places. Market Watch, bad omen. Americans ate out less during the holidays. Sales at bars and restaurants fell in both November and December, the first back-to-back declines in almost a year. And these should have been maybe two of the busiest months of the year, November, December, right? The holiday months, people are out celebrating, shopping, spending time with family. You would think that these would be busy months. In fact, it fell. Restaurants fell. Sales fell for November and December. People are no doubt pulling back now. They don't have the discretionary spending habits that they once did. And people are going to be forced to pull back as they're looking at those credit card balances getting bigger and bigger. And they know at some point they're going to be tapped out. They're going to max out those cards. And where do they go from there? You know, I was watching a video this morning, and I forgot the channel, but they were showing a lady in her 70s, homeless, taking Social Security. She could not get an apartment. She couldn't afford it, living out of her Volvo SUV, sleeping in a car at 72 years old. This is where we're at. We are watching a first world nation become a third world nation, literally right before our very eyes. And people think it can't happen to them until it does. And so many people are going to get caught off guard here, not prepared, who are going to be sleeping in their cars if their car hasn't been repoed. They'll be lucky if they have a car to sleep in. And that's going to happen to a lot of people, and it may even happen to people that you know. Procter & Gamble revenue and profit fall as company looks to higher prices to offset declining sales. All of the company's divisions reported declining sales volume in the fourth quarter. To me, this is just preparing you to pay more for any Procter & Gamble products at the store. We're going to continue to see more inflation. These businesses are going to be charging more in order to make up for the losses. Netflix blows away expectations on subscriber numbers. I thought this was pretty interesting. Netflix added 7.66 million paid subscribers during the fourth quarter, more than the 4.57 million that Wall Street expected. With nobody working, what's the shock? So many people refuse to work. And maybe they have a good excuse. I mean, you can get government subsidies that probably pay more than going to work, so I understand that. And so we have a society that feels enlightened, a society that's very lazy now, a society of obesity, and basically a society of zombies. And many people just sit at home picking up a subsidized check, and they sit at home and I don't know what Netflix even costs, $7, $10, I have no idea. But whatever they're paying, they just sit at home and watch Netflix, watch TV, sit in front of a box all day and fantasize, I guess, watching these shows. It's just a sad state of affairs, ladies and gentlemen. What happened to the time where people wanted to get out and work, where they had too much pride to take government subsidy. They had too much pride to take money from their families, money from their friends. They went out, they worked, they innovated, they put in a hard day's work. I get it. There's no argument. They're taxing us to death. And look, I mean, when the government is willing to pay you the same amount of money to stay at home, most people pick the easy way. They'll stay at home and not work. But it's sad, because I think that we should be paying less taxes. I think if you work overtime, I think overtime should not even be taxed. If you work 40 hours a week and you want to work 50, I think that 10 hours shouldn't even be taxed. I think that we need to give incentives to workers to go work. You want to work 10 hours of overtime, guess what? That's all yours. It's free and clear, all yours. That would give people the incentive to work. But where can you work overtime today? Everybody's giving you 18, 20, 25 hours a week. You know, people got to work 2, 3 jobs now to make ends meet. I think most of us can admit we live in a time where most people feel entitled, where most people really don't have pride. They will take a government check and they won't even blink. People don't really want to be challenged. People don't really take pride in how they look or how they feel. They don't care about their health. They don't care about their appearance. And that's really sad. It really is. We no longer live in the days where people really felt proud that they earned that paycheck, that they, took care of their bodies, had some control with their eating habits. And I'm not judging anybody here, but I think it's a much better, healthier society when we are challenging ourselves, when we're working harder, we're innovating, we're not taking handouts, and we're living a healthier, cleaner life. I just think that that's just a much more positive way of life. That's just my opinion. And I live by that. I'm not perfect. I could do a better job, but look, I'm trying to hit the gym. I'm hitting jujitsu. I'm making videos where I'm trying to wake people up to at least think for themselves, think outside of the box, and be a little bit more self-sufficient. And just think, do some due diligence, do some homework, and just be a better human being and better yourself. Push yourself. That's what I'm trying to do. And I think I could do a better job, and I'm going to try to do a better job. And I hope everybody out there tries to do a better job too, because I think the world would be a better place if everybody tried to do a better job. And it all starts with the individual. When I'm at the store and people are walking around in their pajamas, they're walking around in their slippers, they're 90 pounds overweight. It's sad. It really is. And that's not to judge or make fun of anybody, but that's really sad. That's really sad. How long are they going to live? What kind of quality life do they have? But I could talk about that for an hour, but I want to just get back to this. So Netflix, we have a lot of people watching Netflix, sitting at home with a bowl of ice cream or some Cheerios or whatever they're eating, doing nothing productive. So sad state of affairs. Here's another one from the hedge. Housing starts and building permits plunge in December, and it's about to get worse. December numbers. Building starts were down 1.4% month over month. Permits were down 1.6% month over month. And yes, it is about to get much worse. I don't know about you, but I'm beginning to feel like we are really getting into this now, that there is no going back. We are now deep into a recession that is evolving into a depression. And we are about to see some serious pain in this country. And yet people are ignoring the warning signs. U.S. weekly jobless claims unexpectedly fall. Claims for state unemployment dropped 15,000 to 190,000 for the week ended January 4th. What does this mean? This means that the Fed is going, wow, how are we going to fix this? They do not want to see these type of numbers. They want to see jobless claims increasing, not going down. They want to see people unemployed. They want to see people losing jobs. They want to see layoffs. And they're not getting the effect that they want. So we are going to get more interest rates. They're saying 25 basis points for February. Probably will be 25. I wouldn't be shocked if it was 50. It should be 75 or even higher in all reality. But we are going to get another rate hike, and we're getting more rate hikes after that. And this market is continuing, trying to ignore what the Fed is saying. And today, I think it got another dose of reality. There is not going to be a pivot, ladies and gentlemen. Filing reveals eye-popping amount of former Disney executive earned during his brief tenure. Former Chief Corporate Affairs Officer Jeff Morrell was making $119,500 a day for each day of the 70 weekdays he worked at Disney. That's $8,365,000 for 70 weekdays. Now, I think you're absolutely out of your mind to go to Disney and pay, I don't know, $140 to get in. These family packages are extremely expensive. I think Disney is a complete joke. And when you look at the staggering amount of money that they charge you, look what they were paying this guy, almost $120,000 a day. And this is why they rip you off and charge you, $140 or $200, whatever the ticket price is to get into to Disney. Just an absolute joke. Anybody that supports a company like this, you need help. You really, really do. Look at how they have treated you. Look at how they are ripping you off, robbing you, charging you for everything, because they're going to pay somebody $120,000 a day, and they have the audacity to charge you well over $100 for a ticket to get into Disney. It's absolutely appalling. People shouldn't even accept this. Don't go to places like Disney. I mean, don't go to places like Disney. I'll close with a couple of quick articles. Jamie Dimon says Bitcoin itself is a hyped up fraud. Bitcoin up today. People say I don't talk about it. I don't mention it. Bitcoin way up today, doing very, very nice over the last week or two. Doing very nice. Gold having a beautiful day today, up $30. Difference is I can get to my gold in about 3 seconds. Hopefully, if you have one of these cryptos, it didn't get robbed or stolen today, hacked or hijacked today. So hopefully you can access it when you need to. Look, at the end of the day, if the lights go out, cyber attacks, grids down, a collapsing economy, I hope that your crypto's worth as much as it can be. I hope you can access it. I hope it saves you. I don't see it as a safe haven asset. We know the worse this economy gets, as things really get critical, I do not see cryptos being there. I don't see it as a safe haven asset. Maybe I'll be proven wrong. People will tell me, oh my gosh, it's up thousands of dollars in the last week. Look at it. But it's still down from $70,000, okay? Look at the volatility. Peter Thiel's fund wound down 8-year Bitcoin bet before market crash. Again, there's no such thing as insider trading. These people are so far ahead of the average investor. You know, this is why I'm not in the markets. This is why I'm not in these cryptos, because it's all a giant Ponzi scheme. It's all controlled. And yes, gold is controlled to a degree, but we're going to watch them control it a different way, because they're going to force the price of gold up as we watch what's happening with the BRICS nations, as we're going to watch gold possibly back currencies in other countries. Look, gold is money at the end of the day. Everything else is credit. Gold has been here for over 5,000 years. It's never going away. Gold works when the lights go out. Gold works in cyber attacks. Gold works when grids go down. Gold can't be tracked. It can't be hacked. So I'm going to stick with gold, and so far it's been doing very, very well. I think about 5 years ago it was about $1,260. We're looking at $1,930 today. So it's done very, very well. Nobody knows where it's at, but yet I can get to it in multiple places very, very quickly. So I'm going to stick with gold. And if you're looking to buy gold, check out my link down below, SD Bullion. I've been dealing with them for over 4 years. I know people are just going to cringe that I have a link and a recommendation. But look, I recommend that you get food. I recommend that you get water. I recommend that you get security. I recommend that you get all the essentials. I recommend that you get training. I recommend you get in better shape. I recommend a lot of things every day. I recommend that you buy some gold and silver. That's not financial advice. That's just life advice. It's never going to be worth zero. It will have volatility going up and down, but it will never be worth zero. And you can put it anywhere you want. SD Bullion, link down below. Check that out. Again, I don't care if you buy it, you don't buy it. You should be buying a lot of other things that are even more important, like food, like water, like security. Those are even more important. Once you have those, then think about getting some monetary assets like gold and silver. Hitting your own debt ceiling, what a maxed out credit card does to your credit score. Well, it hurts it. They recommend, this is on CNBC, recommend that a credit utilization is 30% maximum. A maxed out credit card sends red flags to the credit card companies, to the banks. And let me tell you, they're beginning to see a lot of red flags. And people know that they are a red flag because their credit cards are getting maxed out right now. And, you know, we're hearing a lot about the debt ceiling. We better start worrying about our own debt ceiling at home. Yes, the national debt ceiling is a huge, huge deal, but we cannot control that. These politicians are going to continue to spend. They're going to raise the debt ceiling. They're going to continue to spend. But we can control what we spend at home. And if we're not watching our own debt ceiling, we're going to suffer severe consequences. See, we don't have a printing press like the government does. So we have to be very, very fiscally responsible here, because the government doesn't get evicted, but you will. You will get evicted from your rental property. You will be evicted from your home if you default on the mortgage. So if your debt ceiling is out of control, nobody's coming to save you. You don't have a printing press, so be very, very careful. I'll close up with this. Today, another bad day, another warning. Now, tomorrow, I'm sure they're going to try to rally these markets back based on, I have no idea, but the retail numbers, retail earnings look horrible. Real estate beginning to look horrible. Home builders, horrible. Layoffs, horrible. Tech, horrible. It's not looking good, ladies and gentlemen. You look at wealth inequality, opportunity inequality. We've never seen anything like this. This is really, really bad news. And on top of that, we know that the banking system is very, very weak. We know that we're going to see continued food shortages. Gasoline prices will start going up this summer. That's going to push inflation back up. The whole thing is a mess. I don't even know where to begin or to even end with this. And I know I'm ranting, but there's just so much going on. Tomorrow will be an interesting day, but does it really matter at the end of the day what the markets do? Because you know, when you go to the grocery store, things are still going up. You know, when you drive around, the economy is failing. The economy is eroding so quickly. I've never in my life have ever seen a weaker economy. So many businesses closed up, so many vacant stores and vacant office buildings. Where's everybody at? I guess they're all at home watching Netflix with a bowl of Lucky Charms. And it's really, really sad. We have a very, unfortunately, very lazy society, a very obese society, a very mentally limited society. And we're getting weaker and weaker, and people are just not caring about what happens. They care more about what Tom Brady is doing than what is happening to their own country, their own economy, and they're going to pay an enormous price for that action. So be careful out there. God bless you all. Look forward to speaking with all of you very, very soon.